Let's now take you straight across to India's financial capital, Mumbai, from where we have DD India's Shyama Mishra, my colleague, joining us. Shyama, good afternoon. Pretty much on the expected lines as far as the 0.25% cut in the repo rate at which the RBI lends to commercial banks is concerned. But what else gives hope for some better times to come for the nation in terms of economic growth all around as far as this monetary policy is concerned?
Well, yes, Gautam, as you've mentioned, it was very much on expected lines, and people were not sure that how much basis point would be cut. And today we've seen that the RBI governor, it was his first monetary policy announcement, and today he's cut the 0.25 basis point, and this has come nearly in about 5 years. So after COVID, this is the first rate cut that we are seeing, and definitely it's a welcome move from all the industrialists and even the people, the consumers who have their EMIs running. They are also very happy. To delve into more finer prints, we have Anand Singhania with us. He's the past president of IMC Chamber of Commerce and Industry and also the CEO of JK Enterprises. So how do you see this much awaited rate cut that has come today?
So like you said, almost 5 years. I think May 20 was the last repo cut, and this 25 bips is welcome. I think the housing sector, it's almost borrowing around 13 lakh crores, and 0.25% is going to reduce the EMI. You already saw in the last rate cut CRR reduction leading to about 1,10,000 crores of liquidity. So this will also help both, entire loan market, and also the recent budget where the finance minister has tweaked the slabs that will also bring in liquidity, which is much required.
Sir, Governor has highlighted that, India cannot be untouched by the global uncertainties that we are seeing right now. What would you say that, is India's USP, and how do we better stand ourselves, better prepare ourselves?
So I think what this government has shown that we have the capability to be a global player on the supply chain. So if you look at about 5 to 10 years back, we were importer of mobile phones. Today we are exporter of mobile phones. The mobile phone business in India has gone up by 5 times. Take semiconductors, take the entire PLI scheme. We have shown that we are ready to supply to the world market at competitive prices. So as the government is moving towards ease of doing business in a bigger, better, faster manner, we are able to really compete on the international market. One area of concern is, of course, the recent depreciation of the rupee. And I think the RBI is very vigilant about it, and they'll keep the rupee under control, whereas it's good for exporters, but we are an import country. So we have to keep our imports in check.
Also, sir, lastly, I'd like to ask you where the growth projection of the last quarter remains the same, but for the next FY26, the first quarter, that has been changed and that has been brought down. Going forward, in quarter 3, we see about 7%. This particular growth trajectory that we are seeing, how do we maintain that, and what really needs for India to be at that 7% range?
So I think a couple of factors. I mean, government has been doing the capital spending continuously above 10 lakh crores. This year also there's about 11 lakh crores. If you add the defense budget, that's another 2 lakh crores towards capex. This liquidity that will come in with the CRR cut, the infusion of funds in Jan, this repo cut also will ultimately leave money on the table, right? I mean, everybody's EMIs will go down, they have additional money. Also, very important psychologically, I think what the government did with the slabs, when they went from 7, expectation was 9 or 10, they went to 12. So people, which were on the borderline will now really look at these slabs as an additional money available. And it's not just 5 lakhs, it's 5 lakhs multiplied by 4 or 5 family members per unit. So you're talking about, or let's say 2 or 3 who are earning. So you're talking about 10, 15 lakhs of zero tax or low tax regime. So I think it's going to bring in the liquidity that's required for the growth.
All right. So yes, Gautam, more liquidity in the market, and also when people have a lot of money in their hands, be it the courtesy, the tax slabs exemption, and also now the EMI that will come down. So people will have that relief, and once that relief really goes into the market, when with people's spending or investment, it will definitely lead to India's growth story further.